Good morning, everyone. Ben Bryce on Thursday, September 19th, here to give you your wake-up call. And as we get started, as we finish up this overnight session, are a little bit heavier. We had a really good day earlier this week, and yesterday it seemed very strong, but by the end of the day, these markets have kind of given it back. And whatever strength that they can hold from the overnight, or if they find it out of the gates in the morning, it doesn't seem like they have that support throughout the day. And we did have some major news yesterday with the Fed cutting the rate, which on the surface may seem like a good thing. That means that your lending rates are going to go down. If you need a new loan, you're buying a new house, your operating loan, whatever it is, that rate has now gotten a little bit cheaper, which is fantastic. But that also invites a lot more inflation to come back into these markets, which we don't need and has been high for the past few years. So we're looking at that to be an issue that we may be seeing. Now, long term, one rate cut doesn't really mean much, but you start stacking some together, now you've got a trend. And if that's the case, if this is going to become a trend where by the end of the year, we look for maybe another rate cut or two, and we continue that into 2025. Now you have something that can get a little bit dicey, because now we're printing a lot more dollars. That makes our U.S. dollar weaker, again, inviting inflation, but also strengthening other currencies around the world, which puts their dollar going further against ours. So with inflation, that usually means that prices may continue to go up. However, that's not a bad thing, especially if we become the cheapest market on the world market, which could push demand long term into our markets, which is what we need to see. And we really haven't seen all year. Sure, we've been picking up exports here recently, but that doesn't really necessarily mean that we are headed off into a direction that is going to continue. But these rate cuts, that does give you a little bit of hope that there is maybe more demand on the horizon as we get going down the road. Speaking of demand, we did have our weekly export sales come out this morning. Very mediocre, very middle of the road. Nothing really too crazy. We did have some good exports on the beans, but other than that, there really wasn't much to talk about on these weekly export sales here. And it's probably the first week in about a month or two where we haven't had to say much. However, we have been seeing flash sales in the morning, so if those continue, that is an underlying story of demand too that's coming in organically, which is also what we want to see. Skipping over to livestock and really everything else, boxed beef has been getting hammered pretty heavily. And this is what we saw last year around this time going into the fall when that livestock market really started getting hammered. So watch out for that. But right now, it seems like livestock's holding its own. It is more so chopping around. So we'll see what we need to see to get that market to move. And unfortunately, that may be tied to the stock market, which didn't really finish the strongest yesterday, especially after getting those numbers from the Fed. Typically, again, not to go back to the Fed too often, but keep in mind when the Fed cuts rates, that means they're trying to stimulate the economy that needs help. And right now, I'm not quite sure with the Dow and the S&P sitting at all-time highs, we need that help. And with livestock being tied so strongly to consumer demand and consumers willing to spend money on expensive beef, that makes me a little bit concerned about livestock in the next few months as we get going. Keep in mind, too, we have a cattle on feed report tomorrow. So if you guys have any questions, give us a call. We're always happy to talk. 1-800-2-MARKET. That's 1-800-262-7538.